I would say no resistance. We continue to, the ETF market continues to proliferate and grow. I would say that right now, the biggest thing I've found over the last few years is, clients are increasingly adopting what I call alpha plus beta. So we all know cheap, low cost ETFs have been around for a while. They're cheap, a lot of money's flowing into them. But what you've seen in the last few years is a tremendous amount of growth in like what I'd call more alpha generating ETFs, so thematic ETFs. There's even some unique, the innovator ETF, let's say, which I think are fairly unique from like a risk management perspective. So, that I think, what I've been encouraged is, the proliferation of these niche thematic ETFs, which allow advisors, to kind of gain alpha in their portfolio. So that's something that's been, really unique the last 3-4 years. So overall, I would say we continue to lead with content. I spent 20 years doing sell side research at Merrill Lynch and Morgan Stanley. And, what we do is put out a lot of proactive research on, quantitative, fundamental, macro, top-down investment themes, and then how to best express them with ETFs. So that was, a big part of what I did the last 10 years at Morgan Stanley. So we're increasingly doing, content, idea generation, portfolio construction, implementation at Astoria Advisors, and that's been well received from clients. Well, I would say that, there's 7 trillion in ETFs and, 19 trillion, in mutual funds. And I'm sure, the last, 5-10 trillion in mutual funds, everyone thought, that the mutual fund industry couldn't grow. So, my view is, as somebody that began doing research on ETFs in the year, 2000, I remember when ETFs crossed 100, billion in assets, and, people thought that, that was an exciting time, and that, there was not going to be a lot more proliferation from there. And, here we are, $7 trillion later. I would say it's always in the area you least expect it. I think right now, the ESG front, you'll probably continue to see a lot of products introduced. Whether or not there's a lot more adoption, I think, rests on how the ESG, ETFs are constructed. But that's an area, I think, of growth. I also think, more thematic ETFs. Thematic is now like a, kitchen sink term, but I think what we're getting at with the thematics is, much smaller portfolio, higher active share, more concentrated positions. And that's, as I talked about earlier, this combining alpha with beta. So we know the low cost ETFs are your beta. That's how you get exposure to the market. And then using niche, thematic, high concentration, high active share ETFs is a way to get alpha in your portfolio. And that combining alpha and beta, I think, is what's really going to be, the wave, of future growth. And, I've talked to you before about, innovator ETFs. I mean, no one would have guessed you'd have all that assets in that area. So never count the ETF structure, never count them out, because there's always going to be an area that proliferates in the future. Well, I mean, I think, thematic, niche, higher concentrated, higher active share portfolios. I think that is, something that's going to continue to resonate. ESG, there's just so much focus on that from all of Wall Street. I would say that would be also a key area. But I think as far as like the quicker adoption, my gut would tell me that it's more like the thematic, nichier ETFs. I would also put in there active management. I think you're starting to see these massive conversions from big mutual fund complex that are converting their mutual fund into an ETF. If that can be done, seamlessly, in a very tax efficient manner, I do think that could be a huge source of flows and assets, in the years that come. There's still 19 trillion in assets in the mutual fund complex. I think 7 trillion ETFs, and there's no doubt that the ETF is the superior structure, from a tax management standpoint. So I think those are a couple of areas that are going to be, where there's, significant growth in the future. So, very interesting question. And this is up our wheelbox here at Astoria Advisors. We are at the end of the day, kind of macro quant, investors. We follow, macroeconomic policy, fiscal policy. We spend a lot of time looking at the top down, what's going on, in the economy. And then the expression is, kind of from a factor lens standpoint via the ETF structure. So everything that I see, you've got this transition away from Fed policy to fiscal policy. And, right now there's plenty of liquidity that's flowing through the system, but I do think that we're at a point in the cycle where, I mean, the interest rate market is basically pricing in a rate hike, in 12 to 15 months. And the Fed is signaling, nothing to see here, but the Fed is a lagging indicator. So I would not be watching what the Fed is doing. I'd be watching leading economic indicators. I'd be watching, the commodity futures market. Right now, everything that we see at Astoria Advisors, there's a massive inflection point in the commodities market. I think the economy, largely speaking, is doing exceptional. And I think the Fed is going to have to be forced to raise rates or to stop their quantitative easing program. And once that happens, I think that you're going to see, turbulence in the market. I mean, if you look at multiples right now, they've already started, the compressed, QQQ was 38, now it's about 32. XLK was a high of 36, now it's about 31. So, valuations are already starting to reflect that. And, what I would say is that, if the Fed stops doing quantitative easing, if they signal that they're thinking about a rate hike, that's where I would say that there's going to be turbulence in the market. But ETF asset gathering is here to stay. It's a superior structure, liquid, exchange traded. I think that you'll continue to see growth. Maybe not the pace that we're seeing this year. This year is, on par for record inflows, but, there's no doubt that the ETF industry is going to continue to proliferate in the future.